Mo bá rò pé màá kọ̀ọ̀kan.
What's there?
Your video is stopped.
All right, good morning.
Um, welcome you all to today's morning market review. Right, so my name is Don Deo. I will be your okay. So please, you can hear me clearly. Just type a yes in the comments or in the chat. So please, if my audio is clear, just send a yes so I know that the volume is clear. All right, so we are about 68% board, so we can actually start. But I'm waiting for your reply. Okay, all right, so yes. Okay, thank you so much. So I think we can start. So the volume is clear. So I believe I'm being heard by everyone. Okay, so we'll start off our analysis by looking at the fundamentals. Now today is a big day. It's a very big day because, you know, all of the things that we're expecting in the markets likely going to happen. And that's because today we are expecting the Federal Reserve to start their first rate cut in about some days now. They've not cut interest rates. We are expecting that to happen today. All right, so let me quickly pull up my Forex factory, the calendar we normally use, and then we'll look at some fundamentals that we have scheduled for today. So we'll be starting off with the ones that has been released, and then we'll head over to the ones that are yet to be released. Right. So for those of you that have attended, that have been on this program when I handle a morning review, notice that even though I do not castigate Forest Factory, but there's another calendar I normally use. That's because that particular calendar is more detailed than Forest Factory. On Forest Factory, today, early morning by 7 a.m. today, we had the news on the British pound. Today is what? Today is Wednesday. So we had the news on the British pound. It's GDP month on month. It's like I'm looking at the wrong, date. Okay, sorry about this. All right, so I was looking at the wrong dates. So so this particular calendar is the one I personally use, but I am going to display. This is my FS book. So the reason I use my FS book is because it gives more details of some of the fundamentals or some of the news is much more than Forest Factory. So please, can you see my screen? Is my screen visible? Please, if you can see my screen, just send a yes. Just send screen. Yeah, okay, all right. Thank you. All right. So you notice that early this morning, we had the news on the British pound. So you can see we had inflation rates month on month, and then we had core inflation rates on the British pound. Now, these news were positive as anticipated. Yes, it was actually anticipated. Now, but the funniest part is at the same time, why these news were to be released, it was very clear and obvious that we may not see so much movement in the market. Yes, so I wasn't even expecting movement. That's why, on my part, I did not even bother to trade the news because I wasn't expecting so much move. Now, you will not see so much move because of the news on the US dollar later today. So the news on the pound turned out to be, now the major one there is the inflation rate, which is year on year. Now you notice that the inflation rate remained the same. The inflation rate, they remain the same. And the core inflation rate actually increased. So the pound is one of the currencies that there's a tendency interest rate will not be cut anytime soon. Yes, so there's a tendency they might still continue holding on their rate cuts. Now, take note that so long as the currency market is involved, everything revolves around interest rates when it comes to the currency market. So the movement you are experiencing on your chart or the movement we experience in the market revolves around interest rates. Central banks either deciding to cut down the rates or hold on to the rates or increase rates. So those are the major things. So all of the fundamentals that you see come out, on any of the instruments, the end point of all of these data is the interest rate. Is the interest rate. So all of these data that you see is what the central banks of this region need to consider for them to either decide on whether interest rates should be increased or reduced. And so for the US dollar, for a long time, we've been having this front and back as to when the Fed will start to cut rates and so on and so forth. So, but with the data that came out on the dollar last week, it was clear and obvious that this week, there's a high probability that interest rates will be cut. In fact, from 2 weeks ago, we're saying it, that in their next meeting, they are going to cut rates. And that next meeting happens to be today. So today, we are expecting that the Fed will take action on this particular aspect of rates. Now, you notice that in roughly 1 hour from now, we also have the CPI on the euro. There's going to be CPI on the euro and also inflation rate on the euro. Now, this news may not have so much effect in the market because the market is pinned on the news on the dollar today. So we may not see so much reaction as to this news. Everybody is preparing their capital or their pocket or their system for the news on the dollar. All right, so these are just the few news that we have today. And then when we go down to the afternoon, we now begin to see that there are some other news that will come out on the US dollar before the major news for today. So the major news for today is actually the Fed interest rate. So I want to believe you can see my cursor. So we have the Fed interest rate decision. That's going to be around 1. So if I switch on to Forex Factory, let me just look at this week. If I move on to Forex Factory, so that interest rate is by today. Right, so that interest rate is around 1. So we should be expecting that by 130. All right. Now, what do we have? What's the take on the interest rates? Now, one of the things that we must keep in mind is the numbers that are being forecast. When you look at the number that is being forecast, you can see that there's a tendency we are expecting. In fact, it's expected that the rate will be cut, or there's going to be a reduction of interest rates. That's why you notice that we are seeing the previous is 5.5, and then we're expecting a cut of 0.25. All right, so this is because the data that has been coming out on the dollar so far has been suggesting that there's going to be an interest rate reduction. But the question is not about if there's going to be a reduction. The question is about how much they reduce rates. Because 0.25, which is 25 basis points. Now, what we mean by 25 basis points is that the interest rate will be reduced by 0.25. That's 25 basis points. So a cut of 25 basis points has already been factored in like 3 months ago. So if you look at the chart of the dollar, you notice that the dollar has been in a decline. And that is because all the data that has been released or has been coming out of the dollar has been suggesting that the Fed will cut rates today. Now, in addition to that, some of the Fed members So some of the members of the FOMC made certain statements and comments that made it clear and obvious that they are now ready to cut rates. No, you know, when this rate decision is taken, it is a vote among the members. So the members will have to take a vote, those who support a rate cut and those who are against a rate cut. And then those who are suggesting or who are supporting 50 basis points and those who are for 25 basis points. So these things will be decided on. So from last week and 2 weeks back, a week ago, you know, some of the members who were once against rate cut were making statements that suggested that right now they are ready for a rate cut. So the question of when the interest rate will be cut, it was no longer invoked because we all knew that it's going to happen today. The major problem or the major question is by how much? By how much this rate? That is the major question. And that is why, if you look at, there's this website called the Fed Watch. Fed Watch 2 is by CME. Now, if you get to that website, you notice that 65% of analysts are saying that the interest rate will be cut by 50 basis points. So the question now is, will it be cut by 25 or 50? Now, if it is cut by 50, that is seen as an aggressive rate cut, very aggressive. It means that they will be cutting the interest rates by 0.5. And then economists are saying that it's going to be 0.25, that is 25 basis points. So if the numbers turned out to be, now listen now, the previous is 5.5. Today we are expecting a cut. That cut would either be 5 or 5.25. Now, if the rate cut is 5.25, that is, this figure is equal to the forecast. This figure is equal to the forecast. Then the attention will shift to the next part of today's event, which is press conference. So if today's figure is 5.25, we may not see any significant move on the dollar because this 5.25 has already been factored in from 3 months ago. So we see the dollar has been collapsing for the past 3 months. That's because of today. Remember, I normally ask, whenever I'm in this program, I normally ask you, if these big institutions are to pull out funds from the dollar because they hope they are expecting a rate cut, when will they start pulling out the funds? And many of you will answer, you know, that was 2 weeks ago or 3 weeks ago, that they will start pulling out funds for 3 weeks ago. Yes. So 0.25 is already factored in. So if the rate cut turns out to be by 25 basis points, you may not see any movement in the market. There may not be any. The next call will now be to focus on the FOMC projection. After the rate cuts, they will normally give a press conference and then they will give you their projection. You will see, they will read out their economic projections. So it is that projection that attention will be shifted to. So if we have a 25 basis point cut, then do not expect much from the market because the moves that would have happened today has already occurred a month ago. And that is what the Fed was looking for. They are actually looking for what is called a soft landing. You know, a soft landing is when they cut the rates, no reaction. Market does not really react. And that is what they've been doing all this while. You know, hinting that they will cut rates, you know, to put the markets, you know, in the mood. And finally, when they finally cut the rates, you know, everybody's already expecting it, so there might not be any much reaction from the market. That is the soft landing they were looking for. And if they cut by that amount, then we don't be surprised if you don't see any movement. Now, the moves will occur if they cut by 50 basis points. And like I said, 65% of investors and traders are expecting a 50, which means if the actual turns out to be less than the forecast, then there will be massive selling of the dollar. That is what it should. So if the actual turns out to be less than the forecast, that less means that they have cut by 50 basis points. That is considered an aggressive cut, an aggressive rate cut. because it's high. Now, there's also estimates that by the end of this year, they would have to cut 150 times, that's 150 basis total. So they will decide how much they cut. They can cut 50 now, and then 25, 25, 25, and then 50. So after today, there are 3 more meetings. After today, we have 3 more meetings. So if they're estimating that by the end of the year, they should have cut 150, then it means they can start with 50 today, then 25, 25, and 50. Or they can start with 25 and then 50. But if they start with 25, it's unlikely that they will continue on 50. So, but if they are to come down, it is usually the policy to start aggressive and then slow down. So with that being said, there's a likelihood that today we might see a 50 basis point cut, which means we might see the actual turn out to less than the forecast. Remember, if it's a 50 basis point, it means that instead of 5.25, we'll now have 5%. If that happens, then the dollar will collapse. That collapse completely. Now, on the other hand, they might decide not to cut at all, which is very unlikely, very, very unlikely. But it's not uncommon for them not to cut. Because if you look at what the ECB did when they started cutting interest rates, the ECB was hinting that they will cut rates. And when it was time for them to cut, when the market was expecting them to cut, they decided to hold on. They were saying they want to get more data for them. That can also happen, but it's a very rare, very unlikely that that will happen. So these are the 2 scenarios. If the number turns out to be exactly as forecast, okay, thank you. Someone is saying the news is by 7 p.m. Yes, the rate news. Yes, thank you. Thank you very much, sir. You're correct. By 7 p.m. If the news turns out to be as forecast, you may not see any effect. In fact, you won't see any effect because the effect has already occurred. The collapse or the depreciation of the dollar for the past 2 months as a result of the market factoring in a 0.25 rate cut. So the move has occurred already. So don't be surprised if it's announced and there's nothing. What your attention will now be shifting to is the FOMC economic projection. So on that projection, you now begin to know their short-term goals and their long-term goals, what they have in store, what they hope to do. But if it turns out to be 50 basis point, that is, it turns out to be less than forecast, which is what 65% of market participants are expecting, that an aggressive cut should cut today. But looking at the data so far, the data, especially from yesterday, the retail sales from yesterday, it may not suggest that the economy, it may not suggest that such an aggressive move taken in the market, on the Fed. So these are just some of the speculations. So in my opinion, I will personally, normally I trade the news. I enter my positions ahead of the news. Yes, so I do not do the buy and sell strategy. I just enter in one position. So enter a buy or enter a sell. But with the news today, the information we have so far, and what I am currently looking at is very dicey. It's there's no certainty, so there's no need for me to be too, to go into the market. So personally, I will not be trading this move. I will just sit back, allow the move. So my best chance of getting a good move in the market is after the news has dropped. So I personally will not be trading the news. But if you wish to trade this particular event or this particular news, it's important that you apply proper risk management. I would be waiting for the news to drop, then I will take my trade based on the direction. Yes, because there are a lot of confusions right now as to whether it's going to be 25 or 50. Yes, sometimes these figures are certain. Yes, I can tell you for certain that there's news that when it comes out, I can give you almost a 95% accuracy when it comes to focus because of the data I am processing. But on certain news, the data are conflicting. So right now, there's a mix. There are two parties. Those that are saying that 0.5 is too aggressive. Now remember that in trading, we have in trading or in the market, this market as we go, we have the analysts and we have the markets. The analysts are the ones that gives you this focus, where you see here that is showing 5.25. That's the analysts and the economists. The market itself are the major traders. Now, the traders themselves are saying, when I mean traders, I don't mean retail traders. Mostly when I mean traders, I'm referring to those we call the futures traders. They are seeing a 50 basis point. They are expecting the rate to be cut by 5%. I mean by 0.5. But the analysts are saying 0.25. See, there's a difference now. So, but on instances where the two groups agree, then it's almost a certainty. It's almost certainty. It's almost certain. But in this particular instance, 65% of the analysts, 65% of the traders, which is the market itself, those who are actively trading in the market, are saying they are expecting a 0.05 cut, while analysts are saying 0.25. So I personally will not be trading the news. Remember, there are three strategies when it comes to trading news. There is pre-news, there is during news, and there is post-news. You can take your trade before the news, and take your trade at the time of the news, and you can take your trade after the news. So any of these strategies that works best for you. If you're taking your trade during the news, you have to apply proper risk management and be very careful your lot size. All right, so with that being said, I want to now go to the charts and then we'll look at the whole thing on a technical level. But before we move into the chart, if you have any questions, feel free to drop your questions, take your questions. While I'm doing the analysis, I'll be looking at the questions. So someone is asking, what happens when the actual is equal to the forecast? All right, so like I said, that if the actual is equal to the forecast, you won't see any move. There may not be any movement in the market. And I've explained that the movement you are expecting, if it's equal to forecast, has already occurred. That the market already factored in a 0.25 rate cut since August, since July. So since July, it has already been known that they are going to cut rate again. So the selling of the dollar began as far back as July because of that. So whatever effect you would have expected if the actual is equal to forecast has already occurred. So if it turns out to be equal to forecast, that is the actual, then attention will be shifted to the next part of today's program, which is the FOMC economic projection, their press conference. So that is where the focus, that is where the attention will be shifted to, and that is where you will see the move in the market. The moves that will occur will happen if the number is less than forecast. So if the actual is less than forecast, then you will see the movement. And if the actual stays the same, so what I mean by stays the same, if the number stays as 5.5, then you will not see any movement. You will see massive appreciation of the dollar. Massive appreciation of the dollar will happen if the number stays at 5.5. But if the number falls below 5.25, that is, if the number is 5%, then you will see crazy depreciation of the dollar. So those are some of the few things you must keep in mind. Any other question, feel free to drop your question. So let's now go to the charts, and then we'll look at it on a technical level to see, what the index is doing. Remember what an index is. The index is the overall performance of the dollar when compared with the other G10 currencies. So we are comparing the strength of the dollar to the other currencies. That's what is called the dollar index. So I'll start by looking at what is called the seasonal tendency of the dollar. So I believe you can see my screen. So I have this screen which shows me what's called the seasonal tendency of the dollar. If you look at September, there's a part there mentioned September side. This side of the chart, September, is estimated that somewhere around the middle of September, somewhere around the middle of September, we should expect depreciation of the dollar. Let's say this is around the middle of the September, we should expect depreciation of the dollar. And then maybe by the second week, by the last week of September, then we should begin to experience appreciation in the dollar. So this, what you're looking at, is called the seasonal tendency of currencies. This is the movement of the behavior of the instrument for the past 20 years. And it is showing that in the middle of September, there's a depreciation in the dollar. And then somewhere around the last week of September, we begin to experience appreciation in the dollar. So with that being said, I will be expecting that on a technical level, we should begin to see or continue to see some form of weakness. So let's now go to the dollar index, and then we'll now look at what we have in store. So you look at the dollar index, and you notice that we've been in a decline since July. So since July, the dollar has been depreciating. And for those of you that have been following up my analysis, especially on Wednesdays on the dollar, I mentioned it since as far back as August that we are going to run to this low. So I mentioned it that we are going to run down to this particular low. And that's exactly what we have experienced. So if I'm expecting any appreciation in the dollar, it's going to be from this point, having fallen down to this particular low. So remember also I said, based on the seasonal tendency of the dollar, we should be expecting a depreciation within this week, and then maybe sometime from next week, or from next week, you then begin to see appreciation in the dollar. That's very possible because on a technical level, you can see that the dollar has fallen to a very low level, where we return a resistance, solid resistance, a solid support rather. So we've gotten to this level which became a support. So there's a tendency for us to, break through this level and then push back up. So we can break through this level and then reject back up. Very possible. So if that were to happen, that would be very good. It then means that we are in line. So today, I'm expecting the dollar to continue its move down. So I'm currently looking at the daily time frame. So this time frame is D1. What that simply means is that each of these demarcation is 1 month. So I'm looking at the dollar index on a monthly basis. So this is a monthly basis. So I'm expecting a continuation. So let's drop down to H4. On my H4, you can see what happened last week. So from last week, we had a gap down. So the market gap down to this, our level, a low from almost a year ago, gap down to this level. And so usually what I'm expecting at this point is I'm expecting something of this nature. So I want to see the kind of push down to this region or this area of support, which is the green shaded portion, before we continue higher. So this is what I want to see on the dollar for this month. And this is what I'm expecting to see on the dollar. Now, this will largely depend on the fundamentals, this news. So like I said, the news turns out to be as forecast, then we might see a pause. The market may not really move. So the FOMC, take note that the FOMC, which is the projection, which is the press statement of the FOMC, it has a characteristic of spiking both ways. What I mean by spiking both ways is it has the characteristics of going down and going up, or going up and then coming down. Because as the man is giving his speeches, the market is interpreting every single word the man is saying. And so, Powell. So this is a very possible scenario where the market spiked down below this blue line, which I have marked on the chart. Market spiked down and immediately spiked back up, shoot back up. So if you look at the US economy generally, the data that has been coming out so far doesn't suggest that the economy is bad or the economy is weak. So the data is not suggesting that the economy is weak. In fact, the economy is very robust. The labor sector or the job, the labor market is still very robust, still hot. So there's no sign suggesting that the US economy is weak. And the only thing we have on the table is that inflation has dropped. And because of the drop in inflation, there's need for them to begin to cut interest rates or reduce their rates. They don't start reducing rates, then the economy falls into a recession. In order to avoid a recession, interest rate needs to be. That's just it. Now that doesn't translate to a weak economy. It doesn't suggest that the economy is weak. So it's possible we might see a spike down during the press conference and then a continuation to the upside. So this might just be the point where the dollar now begins to recover. Very possible. And also keep in mind that with the second assassination attempt on Trump, we heard of the assassination attempt on Trump. The likelihood or the chances of Trump failing through the election is increasing. Yes, because it then means that those who are attempting to take him out are seeing signs that he might possibly win or something like that. So all of this is strengthening the dollar or bringing strength to the dollar. So if you look at the chart closely, you see that for this week alone, we began to see, some slight increase in the dollar. So like yesterday, there was an increase in the dollar, but it was capped. It didn't really go far. There was just a slight increase in dollar. And so it's possible we might just fall back down, and then we push back up. So at this bottom side, I would want to see something like a head and shoulder pattern, a W formation, or I conclude that trend has come in. That is it on the US dollar. So with that being said, we'll go to other instruments. So for those of us that are online, you can suggest the currency pairs you would like me to analyze so that if someone is asking a question, the news and speech will drop at the same time. So someone is saying that the news and the speech will drop at the same time. How are we going to trade that? Setting pending order. Now listen, guys, the news and the speech will not drop at the same time. It's not possible. The news, which is the interest rate decision, will come first. And then we would see the press conference. So they do not drop at the same time. So take note of that. The news and the speech not come out at the same time. And then this other person says, is it advisable to trade USD JPY this period? Because again, a lot of people, Yes, you can trade USD JPY. You can trade anything at this period. So the BOJ, which is the Bank of Japan, they're in a very good position this particular period. In fact, I would be, I have not looked at USD JPY, if I thought I'm to trade it based on the fundamentals that are available, I would sell USD JPY. If I could trade it, sell USD JPY. I rarely sell USD JPY because of the carry trade features USD JPY. So if you are a swing trader, someone who holds trade longer, like I do, you will be more interested in buying USD JPY than selling. Because if you hold trades on USD JPY, you have positive swap. So because of that, I rarely sell USD JPY, even though currently everything is pointing to a sell. But I just have to wait until when I see signs that it's going to go back up, then I start to buy. All right, so I'm seeing a lot of gold. I'm seeing USD CHF and so on and so forth. All right, so let's start with nobody's sending you Euro USD. Okay, let's start with USD CHF. So let's start with USD CHF. So let me look at USD CHF. Then so let me look for USD CHF. Okay. All right. So this is USD So I normally start my analysis by looking at the monthly time frame. So this is the monthly time frame on USD So you can see strongly that we are actually in a downtrend on USD Now, with this being said, I would expect that we get a continuation to the downside. Let's see how low the market can run. Now, if you look at this, this is last year. So I have just drawn a line on USD So this line I have drawn is last year's low price. Look at this. This is last year's low price on USD And this other line that I have drawn above here is last year's high price. So the highest price from last year is the upper line that you are seeing. And then the lowest price of last year is the lowest line that you are seeing. Now, one of the characteristics of the market is that the market runs for what we call highs and lows. The market will run towards the high or the low, either the high of last year or the high of last month or the high of last week or the high of yesterday. So the market runs highs and lows. If you look at USD very closely, you will notice that it has moved away from the high of last year. Now, hence, it has gone away from the high of last year. That's only one option, the nearest option. The market moves towards the path of least resistance. So anytime the market is running towards a particular region, because that path, there's least resistance on its way. So between the highs of last year and the low of last year, look at where the market is currently on USD Let's assume that someone makes a bet with you and tells you that if you can push this market above last year's high, get $50 million. And if you can push it below last year's low, get $50 million. Where will you push the market to? Give me your reply. Give me your reply in the comment, high or low. If you can push the market, look at the current market price. Look at where the market is currently. And someone now tells you that this upper blue line is the high of last year. This lower blue line is the low of last year. Someone now tells you that if you can push the market above either the high or the low of last year, you get $50 million. Where will you push the market to? Very good. You push it towards the low because it's easier and faster and safer. Least resistance, part of least resistance, no stress. But imagine if you want to run it to the high of last year, it will take you time. It will take you time. You will spend money to even get it there. But if you're pushing it to the low of last year, very easy, very simple. You get your target and you're out. So with that being said, that tells you the overall direction of USD That USD before it will rest, it will have to exceed the low of last year. This thing I've just said to you now is something you can go back and backtest. So do your findings, go back to your chart, put your chart on H1, and you will notice that each year, the market will either exceed the high or the low of the previous year. Each year, market will run, it doesn't matter the instrument, the market will run the high or the low of the previous year. If there's any year it doesn't run the high and the low, it will range within that year. But hence, the market has moved away from a particular point, which is the high. In this case, it's going to run towards the low, which means if you're trading USD then your best bet is sell. And that's because currently the market is in a risk-on mode. And CHF is considered a safe haven. Considered a safe haven because anytime there's uncertainty around the dollar, CHF is one of the instruments that appreciate. So can someone tell me one of the uncertainties that is likely to push USD CHF below last year's low? Something that is about to happen that you think is one of the factors that can push below last year's low. Very simple. You have been following up the news, you should know. Election. Thank you. Who is this person? You deserve an award. Mr. Joel, bless. You deserve an award. US election. So with the US election, there will be a lot of uncertainty around the dollar. The currencies that will benefit from this kind of event is USD CHF and gold, and possibly AUD. So with the US election in just November, investors will be pulling out cash from the dollar and putting it in safe havens like gold and CHF. If that happens, then there's a tendency for CHF to run the low of last year. So with that being said, in your analysis, anytime you're doing analysis, your best bet of making profit on USD, look for opportunities to sell. You always look for opportunities for you to sell on USD. Now, take note that when we say look for opportunities, we mean look for the point where you consider the market to be at a high price. So you do not want to sell when the market is at what we would term a low price. So you don't want to sell at, you don't sell at a discount. You only want to sell at premium. So with that being said, I would want to see a retracement to somewhere that looks like or somewhere that suggests or can be considered as a high price on USD CHF for me to sell. Now, that does not mean you can't sell from where we are currently. You can. But your best option would be to wait for a kind of retracement to a region that you might consider to be a high price. So let's look at USD CHF on a weekly basis. So this is our H4. So look at the H4. Now, the same analysis we did on the yearly. Look at last week. Look at last week's low. So this shorter blue line I have drawn is last week's low price. And then up here is last week's high price. And down here is last week's low price. Now look at where the market is currently. If you're to push this market above either the high or the low of last week, you have to move the market. Let's say you have the resources and you have to move this market either to the high or to the low of last week. Which is easier to move the market? The low. Look at the low of last week. This short blue line is the low of last week, which means before this week we run out, how many days left in this week? After today, we have tomorrow, we have Friday. So we have 3 days left. If you remove today, we have 2 days left. For this week, we finish. USD CHF break below the low of last week. The low of last week is this level you're seeing here. This level I am labeling, let me change the color so that you see. So this level here is the low from last week. I'm shading it green so that you can see it. This green point is the low from last week. So we expect, or I expect USD CHF to break the low of last week. If that is the case, what do we do on USD CHF? What do you think we do on USD CHF? On USD CHF, what do we do? Thank you. Said. We said, thank you, Mr. Emmanuel. We said, Mr. Joel. Who? Ben said. So we said USD CHF. So if you have even had this analysis in mind earlier, look at today's movement. Look at today's movement. This is today's movement. If we had had the opportunity to do this kind of analysis before today, then look at the movement of USD to the downside. It's selling. So having missed this move now, we can wait for a retracement. So you can just wait for the market to give you a mild retracement and you jump in on your sell. Market is going down. Market is going down. If it hasn't exceeded last week's low price, it will not rest. Look at the low price. So this blue line doesn't get there, it will not rest. If it doesn't get there today, it must get there before the week runs out. So your best bet now is to find opportunity. If you are an aggressive trader, you can jump in here and sell. I don't advise. I will not advise you to jump in right now to sell, okay, because this is a sharp. So what you do is wait for a retracement. Market retraces mildly, then you go in for a sell. And if you are in a buy on USD CHF, then sorry is your name. Best option will be for you to close your trade and take the other side of the position. Now, another reason why I would say we sell USD CHF. For those of us that are online, please follow up the analysis. So this is another reason why we sell USD CHF. Let me show you something. So I'll share my screen now. I will take you to this website. So look at this website. Now, this website shows you sentiment of traders. Shows you the sentiment of traders. So look at this. We have USD CHF here. USD CHF. Now, this is showing you that 91% of retail traders are buying USD CHF. Look at it. 91% are on a buy trade on USD CHF. Only 9% are selling. Only 9% are selling it. Now, anytime you see that large retail traders are on one side of the market, your best opportunity to make profit is to take the other side of the market. So hence we have 91% selling USD CHF. It's going to be very rare. I mean, we have 91% buying USD CHF. It's going to be very difficult for USD CHF to start going up. You will see that anytime a large percentage of retail traders are on one side of the market will be doing the opposite. So in this instance, 91% are selling USD CHF. Only 9%, 91% are buying. Only 9% selling. The trend of USD CHF is bearish. Look at this. This is bearish. If you look at this side of this screen, you'll notice that USD CHF is shown here as being bearish, which means you are being asked to sell USD. So this is just one additional confluence that lets you know statistically that USD CHF is poised for a sell. And you can see the selling occurring already. If we had done this analysis earlier, we would have made good profits selling USD CHF. So I want to believe we've done justice to that. So let me look at the next instrument that was popping up on the chart. So the next instrument I see pop up on the chart is gold. We'll go. So let's now quickly go to gold. So the guy who asked for USD CHF, if the explanation is clear, please let me know that the analysis is clear, so that when you go into the trade, you are not confused, know what you are looking for. So please let me know that you followed up on the analysis. All right. So the next one we want to look at what level would USD CHF retrace? Yes, USD CHF is likely going to retrace. Now look at this. On USD CHF still, we have this area of range. Look at this range. So this part is a range. So the market is ranging around this region. So there's a tendency, although it has already retraced, So what I'm saying, so you look at this green candle. This is a retracement. There was a breakout of the range. This is a range. Broke out of the range. It has retraced back to the range, and it's falling away. So this is not a fake breakout. If it were to be a fake breakout, this move up, this green candle would have moved back up above the range. Then you know the move down is a fake breakout. But this here is not a fake breakout. Because after it broke out of the range, look at this range. After it broke out of this range, the market retraced back with this good, fine green candle and was rejected immediately to the downside. So if you're to take a sell on USD CHF, you might not be expecting it to retrace back to that range. I would rather want to wait for this instrument to come around this region. So if you get a retracement to this area, this area which I have just shown as blue, this blue part, get a retracement to this area, you can take your sell. You can take your sell and then place your stop loss above the range. So this is the range. Place your stop loss above the range. Place your entry, enter your trade at this area, and then target the low. So target somewhere below the low of okay, so already even getting there. So if the person asking about USD CHF is online, as the market gets into this area, take your sell. Put your stop loss above the range, and then target the market, target to the downside. So if the market gets into this area, take your sell. Before we round up the class, we'll look at USD CHF and see what is happening. All right, so let's quickly look at gold. So let's take a look at gold. So our time is fast running out. So this is gold. Okay, so on gold, there are some fundamentals that are in support of gold. And one of it is this interest rate decision that is about to unfold on the dollar. So on gold, we can see how gold went to an all-time high. Now, anytime gold gets to an all-time high, there's a tendency to be tempted to sell. Yes, we experienced that some months ago, a month ago or so. Gold got to about 2,500. There was this eagerness to sell. But there were no fundamentals that suggested that the gold price will begin to depreciate. So right now, if you look at the charts, if you look at this particular chart, technically speaking, you should expect gold to collapse or to drop, technically speaking. Why do I say technically speaking? If you look at these charts, you notice that gold has shown sign of weakness. We see the market formed a high. Look at this. Formed a higher high the following day, and then now it has formed a lower high. So you see that after this day was the 16th of September, which the market formed the highest high, that is the all-time high. By yesterday, it gave us a high that is less than the high of 16th. So this year gives us a head and shoulder formation. And what I mean by that is something like this. So look at this. So gold has moved from here. So if I switch to a line chart, you should see what I'm saying clearer. So this is a line chart. Oh, my line chart. So this is a line chart. So you can see the formation that gold has made a high, then it formed a higher high, and then it formed a lower high. So which by itself, the break of the market structure, which means technically speaking, they expect gold to begin to depreciate. But fundamentally speaking, there are no reasons for gold. What are these reasons? Fundamentally, one, gold prices is pushing up because one, the market is already betting on an aggressive policy easing by the Fed. So this aggressive policy easing is because the market is anticipating a 0.5% rate cut. This kind of scenario will support gold. Remember that gold moves based on sentiment, moving based on what people feel about the currency market or what's happening in the market and in the world at large. So the first reason fundamentally why we shouldn't be expecting gold to depreciate massively is because there's an aggressive bet that there's a bet that the Fed will cut their rate aggressively. Secondly, it is estimated that 65% of the market is anticipating a 50 basis point cut. Now, thirdly, the crisis in the Middle East is escalating. Israel has moved their troops to the borders of Lebanon. Over the week, I mean yesterday or the day before yesterday, we heard that some persons were killed from a pager that exploded. And Hezbollah is saying that the persons who planted that pager, is a bomb, is a pager, it rang and then exploded. That Israel is responsible for that. Now, the United States has come up to say that they are worried about the dimension the war is taking, because Israel has said they want to extend the war beyond, other territories of Hezbollah. And the United States is worried about Israel extending the war. Now, why is the United States worried about Israel extending the war? Because they are solidly behind Israel, and they send aids and resources to Israel. This is having a toll on the economy of the United States. So long as that is one of the reasons why anytime there's crisis within the Middle East, gold we appreciate, because indirectly the US dollar, the United States is involved in that conflict. So if you go through the news, I think I saw that news earlier this week, that the US is concerned about the extension of conflict, the extent to which Israel planning on taking the war. That's because they are the ones sponsoring Israel. It means that they will have to be sending more money, more ammunition, more personnel, and all of that. So it's taking a toll the economy, especially now that election is around the corner. So with that being said, fundamentally speaking, there is no reason for gold to drop. Technically speaking, there are all reasons, we have reasons for gold to come down because we see a break of structure already. So what do we expect? What should we do? In my opinion, I would want to still consider a buying of gold. If I'm taking a trade on gold, I would prefer to buy than to sell. But I would want to see gold depreciate to a certain level before I buy. Learn a lesson from what happened previously. If you look at the previous move to the upside, look at the entirety of this period, at the movement of this period. Everyone was expecting gold to dip from here. Gold never came down. It shoot up. Also look at when we got to an all-time high, which is around this region. Look at this region when we got to this point. Everybody was expecting that, technically speaking, gold has given us sign that it was going to go down. It didn't go down, it went back up. Also come to this region. When gold got to this high, it dropped a little, and everybody was expecting that, oh, maybe it will start going down from there. Fortunately, it started going back up. So the last thing that supports the bullish trend in the gold is the incoming or upcoming US election. That election not too far away. Don't expect any sharp decline in gold. Gold is likely to trend to the upside for the remainder of this year. Now, if we go back to the seasonal tendency, which I showed you earlier on the US dollar, if you look at gold, you will notice that on that particular instrument so let me see if I can round up this class. These are our classes. We exceeded our time. I had wanted to show you something on the seasonal tendency. If you look at that seasonal tendency, gold is expected to rise in the month of September and continue to rise in the month of September. So I'm not expecting in gold. So that being said, I would rather buy than sell. Now, if you're selling gold, it should be very short term. So look at where we are currently. Gold has dropped, gave us a base. There's a tendency it drops further. So I will be, for today, if gold drops down to this level, look at this blue line. If gold drops down to this blue line before the FOMC, I will be more comfortable buying from here and selling. If we drop down to this region, I will buy from this region, target somewhere up here. So that's my take on gold. All right. So let's look at another currency before we round up this class. All right. So this is USD-CHF. Now, guys, look at USD-CHF, which we just considered earlier. So you notice how the market has tapped in that region and fell off. So if you took a trade on USD-CHF, as we analyzed, we should be in a very small profit now. So this is a sign that we are actually continuing our move to the downside. So if you missed this point, you can still take a sell where we are currently. All right, so the next instrument I'm seeing on my list here is to permit me to go through the questions and the comments I have here. So I'm looking at these comments. So someone is saying PAN card, all right? Please start clear. Okay, thank you. What? I've answered that question. Information about PAN, JPY, price. All right, please, I'm just going through the questions that if you look at the left side of you, right? Thank you. How do you get the system? Okay, you can get it from equityclock.com. Not tendency. Okay, someone is saying, can we appeal to the authorities to increase the class session on Wednesdays? Your class is always very informative. Yeah, you can write, you can send a message to your account officer or to, whoever is telling them you want it. All right, so I think we have done justice to the few instruments we have looked at. So one of the currency pairs I am seeing most often on my list here on my chart is we've looked at gold, we've looked at USD CHF. So I'm just going through. Then someone is sending pound JPY. So let's quickly look at pound JPY. Pound JPY. Now the pound turns out to be one of the strongest currencies so far. Strongest currencies so far. So if I'm trading pound JPY, it's very dicey because technically speaking, the currency should start appreciating. Fundamentally speaking, it should also start appreciating. But because of the weakness that we are likely going to experience in the dollar, take note of that JPY, pound JPY should start appreciating based on fundamentals and also based on technicals has dropped to the point where we should expect appreciation. But there's a close link between JPY and the US dollar. Yeah. So because the dollar is expected to depreciate within this period, it's very difficult for other currencies to push too high. Other currencies with JPY to push too. So the option of pound JPY is the best among the JPY of currencies. Today's news was a perfect time for us to have entered a trade. Unfortunately, this analysis is coming after the news. Now, what do I mean? Look at the move yesterday on pound JPY. If I were to take this trade, this is where I would have possibly positioned myself for an entry. Look at it. Now, let me show you where I would have positioned myself for an entry. All I will do is I will take my Fibonacci. I will draw from the low of yesterday. Now, this here is the low of yesterday. I will extend it to the high of yesterday and wait for the market to retrace to 61.8%. So if I extend this, look at it now. So I have drawn from the low of yesterday to the high of yesterday. So my entry would have been this area. If you look at my screen closely, you will see there's a line labeled entry point. That entry point is the Fibonacci number 70.1. That point labeled entry point is the Fibonacci number 70.1. That is where I would have taken a buy. All I would have done is for the market to retrace. My Fibonacci is drawn from the low of yesterday to the high of yesterday. Wait for a retracement, and then I will take a buy at exactly that point you see there labeled as entry point. Now, this is the level. This is somewhere in between or below 61.8. Also, for those of you that have followed my analysis, you note, observe that I always use the Fibonacci. In fact, when it comes to technical analysis, Fibonacci is the major tool I use in analysis because I don't want to buy at the high. Neither do I want to sell at the low. I would rather wait for the market to give me a retracement so that I can either buy or sell. So, and the retracements, like I mentioned previously, that the market will usually retrace to at most 61.8% of the previous day's movement. So if you measure the high of the previous day to the low of the previous day, the current day will retrace. If there's a retracement, it's going to retrace to at most 1.8% of the previous day's range. So on USD JPY, very simple trade. I mean, on pound JPY, simple, guys. So please, if you missed any trade today, have a good opportunity to buy pound JPY. Very sweet opportunity to buy it. Look at where we are. This is yesterday's high price. Look at this. This is yesterday's high price. This is yesterday's high price. The point labeled blue, that blue line, that's yesterday's high price. There is every possibility that today we will run above yesterday's high. Every possibility that we will run above yesterday's high. So you can buy and target somewhere above yesterday's high. You can also wait for a mild retracement. There's also tendency for us to retrace. So if we are expecting a retracement, I should expect a retracement at around this level. So unfortunately, we may not see much move until the news on the dollar. So you might expect a retracement around this level before you consider a buy. Now, if you're a person or if you're an individual that doesn't like retracement, then you can just jump in for a buy. Else, I would have said, or I would say, wait for it to retrace and then you buy. So on pound JPY, my analysis is a buy. Because both fundamentally and technically, you are good to go for a buy. So if you are looking at pound JPY, then don't be afraid. The only thing you want to do is just wait for the market to give you a good price. Price is a decent retracement. Now, the retracement may not be massive, but have in mind that before today runs out, we will break yesterday's high. Look at yesterday's high price, very close. Look at the low from yesterday, very far. There's a tendency we break above yesterday. And take note that the news on the pound this morning was good. They were good, very good. It shows that there's a tendency for the bank to hold their rates, to at least for this month. So the news on the pound is good. So if you are an aggressive trader, you can jump in for a buy, target somewhere above yesterday's high. If you are a conservative trader, you can wait for the market to retrace and then you. All right. So I think we've done justice to the currencies we have looked at. So we far exceeded our time. So ladies and gentlemen, I want to thank you so much for wonderful audience. I hope to see you some other time, on Wednesday. So let me just rush through the questions. Please, let's all appeal to our very. Okay, so how can one tell the difference between trend reversal and retracement? Good question. So quickly, let me answer this question before we round up. So how can you tell the difference between a trend reversal and a retracement? Very good question. Now, listen. For a trend to reverse, it means there's a complete change in direction, which means that the structure has broken completely. So there have to be a complete switch to a downside, to a downward movement. So what I mean by that is, for us to say the trend has changed, let me try to draw something on the screen so I can use that to explain what I mean. Let's say this is a trend. This thing will take me some time. Time to draw this. But let me see. Let's see how far I can do this. So please permit me to just try to demonstrate something in my attempt to answer this question. How do you know when the market is tracing? And how do you know when the market is reversing? So in our attempt to answer this question, I want to just draw this so that I can explain it further for you. All right. All right, so look at this. Look at what I have just drawn here. Now, in an uptrend, the market keeps making highs that are getting higher. So you see the market is forming highs that are getting higher. The highs are increasing. In a downtrend, the market will form low highs that are getting low. Now, for you to know that the market has transited from a replacement to a reversal, two things. First is the last high, the low that created the last high, in this instance, an uptrend. This is the low that created the last visible high. So the low that created the last high, that is the highest high you are seeing. there's a low that created that high. Now the low is going to be the low of a particular day. That low has to be secure. Nothing should make the market break below that low. Once the market breaks below that low, the market is ready for a reversal. The diagram you see, the reversal trend. If the market keeps on trending and doesn't break below the last low that created the last visible high, then the market is only just retracing. Now, this structure you see here is your head and shoulder and not trend. A head and shoulder will be formed when the market is ready to reverse. In addition to that, when you draw your Fibonacci, so let's say I draw my Fibonacci from this length. Look at this low here. So let me pick this point. I draw my Fibonacci from this point, and then I extend the Fibonacci to this high. Then a retracement will end at your 78. Any retracement that exceeds 78% of the previous impulse move is no longer a retracement, but a reversal. So every retracement should end above, in fact, every retracement should not go above 78%. Retracement will usually end around 61.8. So when there's a retracement, now before you say retracement, it means there was a move first. There was a move somewhere, and then the market is retracing. That move somewhere is what you measure. The beginning of that move and the end of the move, draw your Fibonacci. A retracement should not exceed 7 of that move. As long as it doesn't exceed, then that's a retracement. Once it exceeds 78, exceeding 78 means that at the time frame you are using for your analysis, once you start seeing candles, the first candle that close below 78, that's the first sign that the market is no longer retracing, but is likely reversing. So you have to see candles, not test. Test is the market spike to 78 and go back up. No, not that one. The market closes a candle close below it. And maybe you see one or two candles close below your 70. That's the first sign that this market is no longer retracing. Any retracement beyond 78 is a reversal. So that's my attempt to answer that question. All right, so ladies and gentlemen, unfortunately, we do not have time. We are almost 20 minutes past our closing time. Please, any further question you have, you can send me a message on WhatsApp if you still have any question. So my number is on the screen. My number is on the screen, and that's my name. So please, you can send me a message on WhatsApp, and I will be glad to answer your question. So thank you very much, ladies and gentlemen, and hopefully see you again next week, next week.